Hey, everybody, welcome back to my podcast. This week I have on Tad Smith. Tad, welcome.
Joe, great to be here. Thank you. I have the distinct displeasure of having to follow one guy named Michael Saylor, who did an outstanding job with you last week. So keep the bar high. I'm gonna like scratch to get to it, but we'll see what we can do.
Yeah, I had to start off with two of the best people in Bitcoin, so Michael Saylor and yourself. So thanks for joining me, Tad. This
Well,
is
you
gonna
mean
be
on average, we're two of the best people in Bitcoin. You've got outstanding and who?
no, it's funny. Tad, I kind of want to start off with general macro talk because I don't think I've ever asked you just this broadly, kind of excluding Bitcoin, at least to start. How do you think about like macro cycles and investing? Like, do you try to time it? Because, like historically we have pretty massive bull markets and then you'll have like 2000 or 2008 or March 20 or like 2020. It's like, how do you think about just investing in general in the context of these like large macro cycles?
Great. So let me just say two things. First, obviously, I'm speaking only about my own behavior. It's not financial advice. And secondly, as you know, I am a partner of 50T with my colleagues, and I'm not speaking for them. I would hope that they agree with me, but they may not, and that's fine. So with that as a backdrop, I would say my thinking on macro has materially changed over time. I would say for most of my adult life, I was very focused on GDP growth and thinking that a growing economy versus a shrinking economy was something to invest into. And I would spend a fair bit of time, as a CEO of two public companies, but also lots of private companies, thinking about what is the underlying dynamic that might drive ad spend, that might drive demand for our products, things like that. Um, Interestingly, in a more recent phase of my life, I have been materially changed in my view on macro by two schools of thought that I believe are both sort of derivatives of Salomon Brothers in the 80s. One is with Michael Howell at Cross Border Capital on liquidity flows, and obviously he does a very good job. And of course, Raoul Powell and Julian Battelle are fantastic at this also. And I've come to see a new way of thinking in the last few years, which is to say the thing that really matters to me over a medium and long term is really what is liquidity doing? Is it rising, falling? Is it changing? Is it accelerating? Is it decelerating? And so when I think about what's going to happen with asset prices, including my own investments, I tend to look at that.
Yeah, that makes a lot of sense. And in particular, like, how do you think about liquidity? Like, do you try to like, do you notice when it's turning over, and do you try to like make sure that you're out of the
It's a wonderful
more?
question. It's
Yeah,
very difficult, by the way, to tie specific trades to a macro flow and liquidity. What instead I do is, first of all, we're talking about, in this case, either in taxable accounts, it's more difficult to do this. In
yeah.
my tax advantaged account, I can do this, which is I try to look at market behavior and begin to think about exerting some personal discipline when the market behavior begins to look a little funny. And this is, I have the distinct pleasure of working with Dan Tapiero, who's really great at lots and lots of things. And one thing he's really good at is seeing markets evolve and change, and also, frankly, looking at charts. And in that respect, learning from him, I would say there are two things I would say. When a market begins to get a little crazy and you begin to hear this time is different, that's going straight to the moon, it's going to be X, which is a really, really high number, and Y date that's reasonably soon. When you get into an Uber and the Uber guy wants to ask you about it, all these signs, I generally take profits. And I've never really been unhappy about taking profits. So, for example, last November, when one of my favorite stocks in my entire life, MSTR, began to do that. Remember that day, that period in November where it started doing parabolic jumps?
Yeah.
When it started doing that, you could either A, believe it was going to 1,000. And by the way, actually, I do believe at someday my portfolio of MSTR stocks may be at 1,000. I didn't think it was going to be last November, so that's when I took some profits. And similarly, I would have to say July, this past July, we're only on July 22nd as we're taping this, but it's been a really robust month. And we've had 3 straight months of outstanding growth. Now, if you watch closely the liquidity still looks really good for the rest of the year. And that's, by the way, with no material change in Fed policy or anything else. It just looks, meaning the outlook looks good. And so I would say it's in my own portfolio, the way I think about it, it is wise both to take a little profits because we might have some chop later in the summer here, just because it's gone so far, you could expect some consolidation. But at the same time, on core assets, I definitely want to stay involved.
When you think about just the concept of taking profits, does that mean like you're shaving some off and moving to cash? Does that mean you're like rebalancing from a
Yeah, very
position
good
that
question.
exploded into another
Very
position?
timely question, Joe Burnett. It was literally one today, which is if I take some profits, what do I do with them? And I'm firmly of the belief, well, first of all, let's set aside cash that I need to use in, say, the coming 12 months, something like that. That's a separate category. For that, if it's a month or two, I'll actually just put it in cash. If it's a little longer than that, very often I'll put it in gold, as a matter of fact. So to me, gold gives for the near term cash or for very short periods where it's what I would call liquidity, short term liquidity needs. It's to me something that gives me protection on the downside. It gives me protection from an unusual liquidity event, meaning if suddenly the Fed cuts rates surprisingly at the July meeting or something like that, or whatever, it gives me some protection there because it will rise. It's 29% year to date, as you probably know, and so it gives me a lot of what I seek in short-term liquidity investing, and it's a safe asset. I can sleep at night. I don't prefer to leave it there too long because, as we all know from the wonderful guest you had last week, gold systematically underperforms tech stocks and Bitcoin over the long term and even over the medium term, and in most years is systematically outperform those systematically out. So it's not to me, it's a liquidity measure and safe spot to park cash. But it's not to me a long-term investment, although it does have a benefit sometimes in softening the blow.
Yeah, it makes sense. For the current Bitcoin bull market that may have started like 2023, if you kind of count from the bottom, now we're like mid
Let's
2025.
go
Like you mentioned,
22, right? Wasn't it like FTX the bottom?
fair.
I think it was. You could just put a little circle that dot and go what's been straight up since then.
Yeah. So like,
Volatilely, sorry, not straight up, like a
yeah, yeah.
sine wave.
Definitely. So yeah, I guess like fall or November-ish of 2022 was maybe the bottom. Like, where do you think we are in this current Bitcoin bull market or liquidity cycle, if you want to frame it that way? Either one. Are we like mid-cycle? Are we approaching near the end? Are we still like very early and like a lot of the games are still to come? How are you thinking about that?
I think we've got about 6 minutes left in the fourth quarter. And what I mean by that is we're late. Assets have grown substantially. I think we're prone to some more volatility soon. We've had the VIX is a little low. It's like 16 at the moment. It could go a little higher. It's actually interesting. It could have gone lower, but I think it's likely to go a little higher. We're entering a seasonally tough period of the year. August and September and October too generally are not a friend to the markets. So I think, but with respect to the 6 minutes, I think what's really interesting is that as long as liquidity continues to rise, as long as the Fed policies and the not QE continue to roll out gently, you could see it being a very, very long 6 minutes with a whole lot of gameplay. And by the way, we might even have overtime. So you look at that and you say, and how many games have been won or lost in the last minute of play, and how many games have gone to sudden death overtime? This may be one of those, but I think my base case planning is we got about 6 minutes left in the fourth quarter. And by the way, because these assets are so sensitive to liquidity, what you could see is some volatility September, October. I don't know. I'm just guessing. I'm not a forecaster. I don't know. I'm
Hmm.
personally just thinking we've had a nice run. It might be time for a little consolidation. And then bang, something could happen. And they could start doing a real, not just a melt up that we've been seeing, but a real parabolic move. And then you would think we're really close to the end. So,
Yeah, that seems fairly reasonable. I would agree
but
with that.
who knows? I don't
Yeah,
have a crystal ball. I'm wrong more often than I'm right.
yeah, me too. Obviously, that's kind of like, I guess I'm curious to hear your thoughts on this. Like my general perspective, at least from how I allocate my personal wealth, is like I don't know how to time the macro cycles. I just stay maximum long Bitcoin and maybe a little bit of like tech stocks and S&P 500, and I just have a decade long time horizon minimum and don't try to time the market. Like, do you think about that the same way at all, or are you more like, oh, I'm trying to trade on a more short term basis, and like if things are going to get overheated, then I'm actually taking a lot of profits?
No, the vast majority of my investments are long term. Crucially, my children's investments are very long term. They're approximately your age, and they're thinking about putting the money away for decades. But it's important to see that that is a true privilege to have, right? A lot of people don't have that privilege, and so they need to think about, well, I don't have that time frame. I need to think about how I can manage that, and that's why it's so important to think about what really is the timeline and when you'll need cash and how much risk you can take. So I think it's a really important thing to have a very frank conversation about.
One thing that I was speaking about with Saylor last week is I asked him, will we have another 2022 where Bitcoin treasury companies all trade below 1x mNAV and Bitcoin falls 80%? And he thought no. He didn't think that Bitcoin would have another like major bear market like 2022. I'm curious if you agree with that or if you disagree with that.
Well, I think the way I interpreted his response was a probabilistic one, meaning he was saying likely not.
Yeah.
Um, Meaning, when you look at what's underway at the moment, the probability that we have a spectacular implosion with all of the secular things and cyclical forces, but mostly secular forces underway at the moment, is very unlikely. Um, but I can't handicap black swans, and FTX was a black swan. But black swans do show up, and I think one needs to be ready for them. If they did show up, there's an interesting question underlying his comments last week about how the current buying crowd or holders of Bitcoin would react and whether it's evolving beyond its sort of secular tech driven, almost NASDAQ equality into more of a risk, an asset that's more immune to risks. Um, and that's possible also, of course. So if you ask me, do I think that the overall level of decline is likely to be what it was last time? No. And similarly, it's, by the way, the other side of the coin that he also makes, which is it's unlikely that the ongoing compound annual growth rate or of appreciation will continue to be what it has been. In
Yeah.
that respect, I believe he's right, but I wouldn't rule out some sort of black swan.
Yeah, I think that's fair. Another interesting data point that I saw recently was money market funds and showing that, like, they kind of peaked around 2002, they kind of peaked around 2009, kind of peaked around 2020 or so. And over the last few years, capital that's getting infused into money market funds is higher and higher. And everyone's, happy earning 4% on their cash when it earns 4%. if the Fed cuts rates, do you think that that could be like another major wave of liquidity that gets injected into scarce assets like Bitcoin? Or do you think that I'm reading too much into, how much capital is just kind of sitting on the sidelines, so to speak?
Well, that's sort of what's your estimate? 5, 6 trillions in that range? What are you looking at? Because
For
Tom Lee talks about it, and last time he talked about it, I think he said 5 or 6 trillion, but I don't know what the number is.
the last data point I saw was like 7 trillion or so was sitting
Okay,
in
so
money
there was
market
6 to 7.
funds.
Fine, sounds good. Um, I would say I don't think you're overthinking it, but I don't think the immediate effect of lower short-term rates is going to be pro-liquidity. In fact, I know that sounds counterintuitive. I think the immediate beneficiaries of lower rates are going to be small and medium-sized businesses, and hopefully, knock on wood, housing and net borrowers. I think that will be helpful, and I think that that's a really major reason why my own personal view is that the rates should be lower right now.
Yeah, that's fair.
I don't know, by the way, what the long end of the curve would do. It's possible that it could actually rally, the
Yeah.
yields rally, in which case it might be neutral to liquidity, or even not pro liquidity. I don't know, but I'm optimistic. So
Have you thought about rates in the context of like MicroStrategy's preferreds? Like, I guess you kind of just mentioned that you don't know what the long end of the curve might do, but if the short end, if they cut rates, then the short end of the curve would go down. It's going to be interesting. I guess it's just going to be interesting to see like what happens to STRF or STRK, where these like are long duration fixed income instruments that could rally a lot if long term rates come down a lot. But I'm curious, like if you've thought about that relationship at all between like interest rates and then what strategy is issued.
well, I frankly, I think what they've issued is incredibly innovative. And I have to say that I sort of kicked myself that I didn't buy Strike when it was released, because it's done a really nice rally. But the truth is, I'm not really. I'm looking for more capital appreciation in the assets that are in that sector of my portfolio and not income related. And so I prefer the common shares for that reason. And I do watch them like a hawk, and occasionally I post something about how they're doing versus IBIT. And for all the noise that Saylor gets from some cranky shareholders about ATM and all the other stuff, he and the team are pretty consistently doing a 2x of IBIT
Yeah,
on the common. They are. They're getting it done.
agreed.
There's a lot of noise, but you just keep looking at the math, and the signal is what he said is we aim for 100% better return than Bitcoin, with roughly a little bit more volatility, and that's exactly what he's delivering. And so I'm happy as common. But for some members of my family that are more income oriented, I think Strike is very interesting if they also want capital appreciation. And I think Strife is very interesting. And I got to tell you, STRD, and I love Stretch too. I think they're also clever. So
Have you on Stretch, which is the new one that was announced yesterday, so Monday.
yesterday, I mean, real time, like a day after he got off the podcast with you, he
Yeah.
was busy he was tapping out the new Stretch prospectus using AI while he was talking to you, right?
Probably. I'm curious, like, what are your, on that one in particular, what are your thoughts? It seems like very innovative, like they're all innovative, but this one's even more innovative than the last three. I'm curious, like, what are your general thoughts on it?
Well, what was one of the most fascinating things to me that he said at his Orlando conference this year was that this innovation that is coming out of strategy, Michael's really kind of sitting down with AI and cooking this stuff up. I mean, that's literally what's happening. And then he kicks it around with his attorneys and Fong and the rest and Andrew, and they come up and then they refine it a little bit and they test it, and maybe it works and maybe it doesn't internally, and then they get it to the right place and they roll it out. And what I think he's done with Stretch, and it's a very nuanced thing. By the way, think about this for just a minute. You've got a genius level MIT guy who's got a genius level team going back and forth with AI to come up with a financial product. And then so you know that what's coming out of there is going to have a lot of nuance and a lot of sort of subtlety to it. And Stretch is no different from that, in my opinion. To me, it looks increasingly like a Bitcoin-backed stablecoin of some version. And so you got to sort of pierce all the sort of legalese, but you step back and you say, what's really going on here? And what he's really doing is issuing a floating rate debt backed by Bitcoin that is essentially pegged, and that smacks of stablecoin with a Bitcoin backing. Who knew? In other words, strategy looks a little bit like, I don't know, shall we say JP Morgan?
Yeah, I agree. And to me, it's like the product, if it works well and remains pegged to, a stable
And gets
price.
liquidity. That's the key.
Yeah, that's a
Yeah,
good
I mean,
point.
that's one of my issues with Strike. I wanted to make sure there was enough liquidity in there so if I moved in a position, I could get out, particularly in choppy waters.
Yeah,
But he's building up the liquidity. He knows he needs to do it, and I think he's very focused on it.
yeah. And I guess like if it does get large enough and it does get liquid enough, I mean, it seems like it could
Or
be
you
a
might even say when.
yeah, exactly, when it gets large
When it's
enough.
very, I think there's a good chance it will be. It's happening.
Yeah, I agree because if it works, which I think it will, it's an incredible product, and it's like, well, that competes against the $7 trillion money market fund or the entire U.S. banking system to some
Back to your
extent.
point, your original question.
Yeah.
All roads lead to your question.
So it's just like it seems like I mean, he says he's going after, the entire, or not the entire, but a good portion of the fixed income market. Now he's kind of tackling like the market for money itself or dollars itself. It's like those are massive markets that he's really just kind of scratched the surface of, and arguably maybe he has created like the best product in each of those markets for those investors.
Certainly the most innovative and the most transformative and the newest and freshest product. And over time, they may well be the most profoundly transformative product. He talks about making his balance sheet productive, and there are really two schools of thought on this. One is people that think he should be generating yield on his Bitcoin or deploying it. And let's set that aside for a minute because he makes the strong case when he's ever addressed this on several occasions that he is making his balance sheet productive by creating the liability side of the balance sheet robustly backed by Bitcoin. And you got to give him credit. He is.
Yeah. Yeah, it kind of flips everything upside down and confuses a lot of people that are definitely not in Bitcoin at all. But I think it makes a lot of sense once you realize the
Yep.
dollar is designed to be debased. Yeah, it's really interesting. I do want to ask you some questions about Bitcoin treasury companies, but first I kind of want to go somewhere else. I kind of want to take a big picture perspective and take a step back and kind of just ask, like, why are we here to begin with? Why is Bitcoin appealing to the younger generation? Why is Bitcoin appealing to even the older generation? I'm curious, like, what you think about that very broadly.
Wow. You know, Joe, my generation, um, we haven't been. I mean, and let me be clear, we've we intended to do well. What I mean by that is what I'm about to say will sound critical. It is critical, but it's not from bad intentions. I don't think we're leaving Gen Z and millennials, late millennials in particular, but Gen Z very much in particular, the best inheritance. When you think about the combination of $35 trillion dollars in debt, you guys can't buy a house, you have $1.7 trillion dollars worth of student debt, and now we tell you, oh, by the way, you could first of all run up a multi-$100,000 bill for college, come out, try to get your ticket punched at a high quality white collar job. Oh, but wait, AI is on the way to eat your lunch. We haven't done right by you. We really haven't. And moreover, along the way, what have we done? Because we can't maintain our own fiscal prudence because we're aging and because we don't like taxes and because we want to spend more money and spend more money and spend more money, we are in this, as Lynn Alden says about the train, this train doesn't stop of fiscal dominance. We can't, we need to print our way out of the problem to make our ends meet. And that printing of money, however well intended to, satisfy the needs of people that need the money, um, has a horrible effect on you and your generation. Because what you have to sell is your ideas, your creativity, your entrepreneurship, your labor, your work. And when you print money, the people that are the beneficiaries are the ones who own assets and capital, and not the ones who sell their work. So all of those things get harder for you. And Bitcoin is a way out. It is an opportunity for someone to begin to develop a sort of financial resistance or immunity, if you will, to the effect of the money printing. And to me, at a time when your generation is increasingly radicalized, I mean, you can see what's going on all over the nation, but New York City is the most recent manifestation of it. Who am I to say that you're wrong to be angry? I was just with multiple holidays, and I have many, many nephews and cousins who are your age, and they are incredibly talented. They're like you, but they're angry. They don't. This is what they're struggling to make ends meet, and more importantly, they're struggling to have vision, even though they're positive and upbeat. You guys are incredibly industrious generation, but we haven't really done right by you. And I think Bitcoin is a very powerful solution to a lot of that, not all of it, but a lot of it. And it sits right in the center of this conversation. So what Michael Saylor has already said he's giving all his money away. So adding another billion to his ledger doesn't really do anything. I mean, so why does he spend all 100 hours a week doing nothing but this? I think he fundamentally believes that this is a righteous path, and I think that my generation owes a righteous path to you all.
Yeah, it's a really interesting point because I think, me growing up from a good family, getting a good job and being early to Bitcoin, like many things went my way, and I still look at my peers and I'm like, wow, like, how are we going to ever afford a house, or like, I mean, I could obviously at this point, but, seeing other normal people that got into student debt, got a relatively normal job after college, weren't early to Bitcoin by any means. It's like those people would never be able to afford a house or anything reasonable. Or if they did, they would just be paying off their mortgage for their entire life and their student loans. It's crazy
The
to think.
stats on it are crazy. I actually, Pomp or somebody had something on it. Let me find it around here. Oh, here it is. It's like the average home in 1970. This is it. It cost $25,000, which is 190,000 in today's dollars. Today, the median home price is 420,000, while wages have barely moved in real terms.
Yeah.
And then there's one even. This is one of them. Let me see where it is in here. There was some crazy stat about the ratio of income to a house value to income that has soared. And this just, these are just stats that are devastating. And so that's why I think this is such an important mission that folks are on.
Yeah, I completely agree with that. I also personally, I don't blame the older generation for this at all. To me, it seems just the system that we're in, the monetary system that we're in, led to this as like a natural, long-term, inevitable outcome, and it was how it was going to play out. And we need another monetary system to hopefully fix a lot of these problems.
Well, the problems aren't new. I mean, they're as old as Rome and Greece and even older. I mean, the idea that the sovereign can't make ends meet and therefore creates money it's irresistible.
Yeah. Yeah,
Yeah.
good point. It is inevitable over a long enough time horizon if someone or a small group of people has access to the money printer. It's eventually gets used to try to solve every problem that happens to come up, and then that leads to other problems.
Imagine a credit card where the bill never came. What happens?
Yeah, I
Yeah,
would
I
be
mean
kicking
it's
spin.
right. If you never get a bill for the credit card, or differently, you can print money to pay your own credit card, you're going to use it a lot. And does that make you bad? No, but it does mean that it is a breach of duty to subsequent generations, and that's what I'm trying to say. So
Yeah. Yeah,
yeah.
that's a good point. It's definitely a super interesting topic, and to me, like it's if you look back at over the last few decades, like just the rise of like socialism and like wealth inequality, it's like not surprising when it's kind of like again, I kind of view that as like an inevitable outcome that would have just happened if the wealth divide gets larger and larger, like it has been. It seems like that's just naturally going to occur.
Well, it's I think not a surprise really that wealth inequality in this country has gone through a number of different phases. But the most recent patch of wealth inequality really began to accelerate, I think, in 1971, and took off through the 80s and 90s. And the reason is because at that moment, the dollar was in effect depegged from gold. So there was no effective discipline on money printing. And then there's been a gigantic amount of money printing since. And uh, you look at anyone that's had assets, particularly risk assets, during that period of time, and there's been an explosion. Now, people will also say, well, there's technological innovation that's come with that. There's deregulation and globalization, a lot of other things. I don't dispute those points as being important, but even in the case, for example, of technological innovation, um, where do you think the venture capital that was fueling Silicon Valley came from? It came from surplus capital that largely had been created. Um, and so not surprising. And by the way, the other thing to think about as the money printer gins up and goes a little faster, what you find is that large institutions that have liabilities like pensions and endowments, long-term liabilities, they have greater pressure to go farther and farther out the yield curve and find yield because the safer instruments don't do the job anymore because the costs are rising faster, right? So as in effect, they have to go look for private equity, venture capital, all these things which have fueled a magnificent technological revolution in our country. So I'm not knocking them, but at the root of even some aspects of people of inequality that people don't think are that are different from the money printing. Even money printing is there too.
Yeah, that's a great point. Okay, I do want to ask you about more about Bitcoin treasury companies, just because
Bitcoin treasury companies, back to math and economics.
exactly, it's been such a interesting growing phenomenon, obviously since strategy started, but especially over the last 12 months. How do you see it evolving from here? Like, do you see it changing? Do you see it growing? Or how do you think about it broadly right now?
Um, well, first of all, it is growing. So let's just say what's happening. It's growing very rapidly. It's diversifying. It's it is increasingly a scramble for Bitcoin in the conversation we're talking about. But of course, it's not the only asset that people are putting in their treasury. And I think there's also pressure on the various participants to differentiate themselves and think about, okay, if I put Bitcoin in my treasury, how does that strategy evolve over time so that I can create a differentiated advantage? And how is it that I can make a flywheel work over time? And those are the kinds of questions that I think people are wrestling with, and appropriately so. So,
I asked Saylor this question. I obviously will want to get your thoughts on this one as well. Semler Scientific, if you were helping lead Bitcoin strategy at Semler, what would you be doing? What priorities would you have? How would you be thinking about it right now, given that specific context?
Okay, so as I said, I watched your interview, and I have to say I was watching it intently and leaned in particularly on this one because I thought his Sailor's take on it was absolutely spot on. So I don't have any difference in point of view on that. I'll just summarize it in three areas. Number one, I think he was very smart to say that make sure your operating business is doing every bit as much as it could be doing. And number two, think cleverly about how you're communicating and messaging to the marketplace. And number three, keep the balance sheet in a strong and innovative space. And I would summarize those three. I haven't seen the interview in 2 or 3 days, but it seems to me that those were the three things. And it seems to me that you and Eric and the rest of the crowd there are working on all three of those.
Yep, sounds about right. This is kind of a related but slightly different question. If you were still running Sotheby's or Madison Square Gardens, would you have a Bitcoin treasury strategy? And how would you go about doing it? And how would you differentiate either or both of those businesses?
So let's do Sotheby's first. Sotheby's, I did exactly the opposite of what Saylor says. Because Sotheby's is a very asset light business that throws off a lot of cash, and I use the cash to buy back shares and decapitalize the company, if you will. With the benefit, of course, I had not ever seen a Saylor video by then, so I was using what I think Saylor would sort of smile and say is the Harvard Business School playbook. But interestingly, he's not wrong. The effect of that, by the way, was to reduce the float on the company, and but I had the advantage that the company was to a great extent an incredibly attractive and desirable scarce asset as it was. Meaning the company itself, the brand, what it does, the whole thing. It's just Sotheby's itself is a trophy, and so it's not a widget maker, it's not a soap manufacturer, it's not something like that. And in that case, as the overall capitalization of that sort of company begins to decline, it actually attracts acquisition interest. Now, that was not my intent at the time. It turned out to be a happy benefit of it. But if I had to play the whole thing over again, I think I would be much more thoughtful about assets that were on the Sotheby's balance sheet. By the way, the owner to whom I sold it has been much more thoughtful about assets on the balance sheet and is much more capital efficient than we were as a public company. So I think Saylor's onto something. With respect to Madison Square Garden, the truth is and by the way, at the time I ran Madison Square Garden, it had both the cable networks, the teams, and the arenas all in one entity. They've since separated. Of course, they've since added the Sphere. I would say Madison Square Garden is the underlying value of what was Madison Square Garden when I was there was both the value of the teams, the New York Knicks and the New York Rangers, as well as the value of the arena and the real estate. And in that, and that's a different looking vehicle than a soap manufacturer by far. Those are trophy assets, and they didn't have. I mean, the company didn't have a lot of excess cash that was being thrown off. It was positive cash flow, but it didn't have a huge amount. So I don't know. I'd have to think about whether a Bitcoin strategy for that today would make sense, or whether reinvesting the cash into new and interesting things that were contiguous to the business, such as, in fact, the current management, which was the executive ownership, did then. I'd have to think about it. I would say if I were, as a CEO, then if I were the owner, I would probably apply the same test that I apply to all my investments, which is that they have to outperform Bitcoin's hurdle rate for me to want to sell, because in effect, I'm selling Bitcoin to put money into something. And that I have to think about.
Yeah, and then that would make it fairly difficult to allocate to things outside of Bitcoin potentially.
Well, honestly, that's the challenge, right? I mean, when you have, I mean, let's talk about Saylor for just a minute. You know, he could put $1 into Bitcoin, or he could put $1 into the software business. I don't know how this if he didn't need the cash flow from the software business to help support the Bitcoin strategy. I'm not sure that he would get. He would look at that and say, "Why would I put $1 in the software business when I could put $1 into Bitcoin?"
Yeah.
It's the fact that the software business gives him a stable, and I mean, it gives him sort of a safe harbor in the Investment Company Act, but plus also it gives him, a tech edge, and it probably gives him the cash flow that he needs to generate in the Bitcoin. But at the same time, it needs to be as efficiently and effectively managed as possible, because every dollar that's trapped in his software business is effect a dollar that didn't go into Bitcoin, and what those are returning.
Yeah. Yeah, it's a really great point. What do you think is the long term game, or the end game, I guess, of these Bitcoin treasury companies? And I guess maybe specifically strategy, since many Bitcoin treasury companies are kind of effectively just copying their model. Like, is the end game Saylor borrows dollars forever and just continues to outperform Bitcoin and other assets, or does at some point this like arbitrage opportunity of borrowing at 10% and investing at Bitcoin at 30% or whatever he says, does that kind of end and not become available decades from now? How do you think that these companies will evolve?
Well, let's start with the words forever and decades from now are way out of my investment horizon, and honestly ought to be way out of yours, Joe. Because forever is a long time, and even decades from now, as one who's familiar with more decades than maybe the other gentleman on this one, I could say decades are a long time. But I would say this. One would expect this proliferation of treasury companies to consolidate at some point. Why? Because there will be markets, and there'll be downward pressure on the multiple of net asset values as they proliferate. And I think pretty soon it will be the opportunity to look over at the next mNAV and see, well, I could acquire that entity and its cash generating business, as well as get the Bitcoin hoard on a decent mNAV. Maybe I should start having a conversation.
Yeah.
So here you heard it. I don't think you heard it first, but it wouldn't surprise me that they consolidate over time. And by the way, the buyer of last resort is your last guest. Now, he knows very well that he's not interested in looking at anything that doesn't have a higher return than just buying Bitcoin. So you'd have to think about what would it be and why would it be in his interest to buy X rather than Bitcoin. And I think he's probably appropriately thinking it isn't, and therefore there's no reason to even think about it. But over time, we're going to expect to see the mNAVs fall. And over time, we're going to expect, as more and more of these things proliferate, you would expect consolidation.
Do you expect, smaller Bitcoin treasury companies to sell to another company out of like distress? Like, would it be during a dark bear market that would occur, or would it just be their mNAV is a little bit above 1, another company is trading at a 3x mNAV, and that just happens to appear to be an accretive acquisition? What do you think is more likely, or both?
Companies sell when the board and typically the board and the management in alignment, but sometimes not when in alignment, but typically in alignment, that the price is right and the timing is good. And that's when they sell. Oh, and by the way, and they have an offer that's credible, that where the check will clear. And that can happen in a bear market. It can happen in a bull market. So I don't think we should necessarily point to the conditions of the marketplace, Joe, to be dispositive on the question, so much as it can happen in a lot of different contexts, but there could be a moment when it happens.
Yeah, that makes sense. I'm sure I asked you this last time, but it's been probably at least a few months, maybe longer than that, since we last talked on a podcast.
And you're in a whole new life.
Yeah, exactly. How do you think about valuing these Bitcoin treasury companies? Like, you'll see, I'll pick two for an example. Strategy might be trading at 1.x mNAV. Metaplanet might be, it's traded at like 7, and then now maybe like around 3x mNAV. Why do you think these companies trade at a premium to their underlying Bitcoin, and why do some trade at, such a significant premium and others trade at a not so significant premium?
So I think the reason some of them trade at a significant premium is because they have given a credible and believable narrative to the market that the growth in Bitcoin per share justifies the outsize premium, if you will, over the net asset value. And it could be because either they're small and growing very rapidly, or they have some other conversation going on, such as in a particular market, there is an unusual regulatory situation that makes them a special case that is unlike, other kinds of regulatory situations. Those are areas where you might see that. I tend to think that that sort of bubble in mNAV is relatively brief, and they settle back down pretty quickly. And that was the second part of your question. What was the first one? I'm sorry.
Like why do they trade at specific mNAVs? Like why are I pretty much answered both.
Yeah, I think I answered both.
Yeah.
Yeah.
Yeah, because it's just interesting to think about it.
By the way, it's important to see that it's really hard to have a very substantially growing unit number of Bitcoin per share when you have as much Bitcoin as Michael Saylor does.
Yeah.
So you would expect just the law of large numbers, which he said very clearly earlier this week, or last week rather, would put downward compression on his mNAV and also on his volatility, and both have come in. So
yeah, it's a good point. I mean, he already has.
On the other hand, crucially, he also has emerged with a spectacular moat. So his particular, meaning he's sort of unlike the others. And that makes his a special case in some respects. By the way, I do want to say for the record, I'm not saying anything about Semler Scientific, even though even though it's your proud alma mater. And the reason is because I'm friendly with Eric, and I never ever talk about or invest in my friends' companies. So it's just a personal thing. But I am a huge fan of Semler Scientific and what you all are doing. So I just wanted to put that. The reason I am steering around that particular thing, I'll just tell you it's because of that.
Yeah, makes perfect sense. And that's also, I'll ask other people questions about it, but there's only so much that I can say about it.
Of course.
Well,
yeah, of course.
Cool. Well, that was an interesting answer to that question. I do want to ask you about art in Bitcoin again. You had a really interesting thread recently about Bitcoin demonetizing art, and obviously you're very familiar with the art industry. Do you want to kind of elaborate on how you're thinking about that at the moment?
Sure. Well, to summarize the thread in sort of one stat, we sold, when I was at Sotheby's, a painting in 2017 for $110 million, which was 55,000 Bitcoin at the time. And today, $110 million is something like 840 or 900 Bitcoin. Now, if you want to adjust for dollars, you could take an arbitrary adjustment and maybe double it. But you're talking about a 95-ish to 98% collapse in value. But there was nothing, the thing that was sort of, that got a lot of play about that particular post, Joe, was not that the math doesn't apply to houses and everything else. I think it's that the former CEO of Sotheby's was saying the quiet part out loud, which is that Bitcoin is the fastest horse in the investment store value race. And it is, if you give it long enough time, it's going to demonetize everything. And I then went on a few days later to say something even more provocative, which is, with the advent of AI, do you think Bitcoin is demonetizing a Harvard education? Meaning, is it a better decision to go borrow 200,000? And by the way, I'm a Harvard Business School alum. I went to college elsewhere, Princeton. I'm a big fan of both. But I think it they're so expensive, and Bitcoin is such a compelling investment. If you set aside the 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 huge benefits in my mind of the actual learning and enriching of a person, all that other stuff. If you think about those investments as investments in a career or a pre-professional education or a future income stream, which is honestly Gen X and later millennials, and certainly boomers, that's the way we thought about them. You could ask the question, does Bitcoin demonetize some of the more expensive aspects of higher education? And the answer is probably yes. Meaning, would it be a better investment to borrow $200,000 and send Tad to Harvard today in the year 2025? Or would it be better to give Tad a $200,000 of Bitcoin for his future? I'm not sure which, but I suspect it's going to be Bitcoin.
Yeah. I mean, yeah, I guess that's been true probably for the last 15 years. I kind of wish
I think it's been true for a while.
Yeah.
It's been true for a while. So that's both art and education for you. And I think we could have, and so it's sort of, now, by the way, it's not a new idea that we've done it with housing, of course, but I think there's a meme that you could do, which is Bitcoin is demonetizing everything, because you could do that math with any store of value or any asset. In fact, interestingly, I sold my wine collection this year and invested it in Bitcoin.
Huh.
Why? So Bitcoin demonetized my Burgundies.
Very cool. I didn't realize you did that. That's awesome.
I haven't said it publicly until now. There you go.
Smart man. Well, Tad, this has been an incredible conversation. I always love talking to you and hearing your thoughts on so many different aspects of investing, Bitcoin, treasury companies, and much more. Any final closing thoughts or questions that I should have asked you that you still have something to say?
Joe, I'm honored to be on. It's wonderful to talk to you. I think you have such insightful questions, and I think people learn a lot from what you're up to. I'm thrilled you're working with Eric and the great crowd at Semler Scientific. I know that's going. There's exciting things going on with you, and I think that's very encouraging. And the only modest complaint I have is you put me in the wake of the great man, Michael Saylor himself. So other than that, that's it. Thank you for having me.
Of course. Thank you, Tad. Really enjoyed it.